Good morning, I'm Peter Milias from the Finance News Network. Stocks fell Thursday as investors grew increasingly concerned the Federal Reserve will keep raising rates despite signs of a slowing inflation. The Dow Jones Industrial Average lost 0.8%, giving up gains from the New Year rally. The S&P 500 also fell 0.8% and the Nasdaq Composite shed almost 1%. However, both are still positive for the month. All of the major averages are on pace for a negative week. The Dow is down 3.7%, whilst the S&P and Nasdaq have each lost more than 2% on a weekly basis. To S&P 500 sectors, mostly performed weaker overnight. Energy was the top performer, up 1.1%, whilst industrials was the worst, down 2.1%. And Netflix has reported their earnings overnight. They have missed out on earnings, but have recorded an additional 7.66 million global subscribers compared with the 4.57 million subscribers that they expected. As such, their share price closed 8% higher. Overall, overnight's performance came after initial filings for unemployment insurance fell to their lowest level since late June last year. The Labor Department reported, signalling to investors that the labour market is resilient amid a slowing economy. Ed Moyer, a senior market analyst with the currency data and trading firm Oanda, commented, "The labour market needs to break to allow the Fed to comfortably keep rates on hold." Investors have been passing other recent economic data and Fed remarks for clues on how high rates will go. But will recent numbers point to easing inflation? JP Morgan Chase CEO Jamie Dimon thinks rates will top 5%. "I think there's a lot of underlying inflation which won't go away so quick," Dimon told CNBC's Squawks Box from World Economic Forum in Davos, Switzerland. Elsewhere, investors are watching key quarterly reports to see if there is an earnings recession brewing. There are a few dynamics behind the recent deterioration in risk sentiment. The biggest issue seems to be some dent in the momentum behind the soft landing narrative with a string of negative US macro surprises. The disappointing earnings/guidance also plays into growth concerns as more companies flag heightened macro uncertainty, softening demand, and destocking. There are some corporate layoff announcements playing into growth concerns as well, after seemingly attracting some positive spin via economic normalization and profit margin protection. At the same time, Fed officials have stuck with their higher for longer messaging and pushed back against some of the disinflation enthusiasm. There are some doubts about the credibility of the recent rally given the marked outperformance of the most shorted baskets. To commodity news, market participants stated that copper bulls that are betting on a strong recovery of physical demand after the Chinese New Year should be wary of getting carried away, as Reuters reports. Note that a rally driven by sentiment and expectations without an actual increase in consumption could trap investors in an eventual sharp downturn, such as the one during mid-2022, triggered by the Ukraine-Russia war and an energy crisis. Jefferies analysts believe that China's reopening could easily drive the demand 100,000 to 200,000 tonnes higher, enough to flip the supply-demand forecast into a deficit. Elsewhere, supply-side concerns remain in place for 2023 in Chile and Peru, which account for around 30% and 10% of the global mining supply, respectively. BHP have said that China would act as a stabilising force for commodity demand this year as Beijing's pro-growth policies offset weaker economic performance in other developed markets. The company said on Thursday that China's reversal of COVID-19 restrictions and a stimulus for the property sector, a key driver of iron ore demand, would support progressive improvement from the difficult economic conditions of the first half. Shares closed 1.2% higher yesterday. And New South Wales is set to introduce a domestic coal reservation policy to alleviate the energy crisis. The Australian reports that New South Wales Treasurer Matt Keane is looking to order thermal coal miners to reserve up to 10% of their output for New South Wales power stations by the end of the month, in an attempt to avoid shortage in supply. This is an expansion to the rules introduced in December, requiring some coal miners to reserve production on top of a $125 a tonne cap on coal prices sold to local power providers. The Australian speculates that this could include major producers like BHP, Whitehaven Coal and Yancoal. The SPI futures are pointing to a flat start, down 1 point. Thank you for listening and have a good weekend.